All right, guys, this is Byte FX Forex Academy. And if this is your first time coming across this YouTube channel, kindly do well to subscribe to the YouTube channel and don't forget to turn on post notifications. So anytime we drop new videos like this, YouTube are gonna notify you that I've dropped new educational video so you can learn from it. So in this video, I'm gonna be talking about my two time frame analysis as you guys have requested my two time frames analysis. So there are key levels, there are key things you need to know about this my two time frame analysis. So which I want to list out first. So I basically use two time frames to analyze, right? So and I believe you already know what time frames are. So if you don't know what time frames are, go back to your beginners course and go and learn about what time frame is. You get. So we're talking about two time frame analysis now. I mainly use 4 hour time frame and 4 hour time frame and let's say 15 minutes time frame. Yeah, basically that's the major time frame that I use. What did I use 4 hour for? And I don't know what that is what we're gonna be discussing. So I use 4 hour for market trend and analysis. So in this case, we use the 4 hour time frame, which is the higher time frame, to check for market trend, and I'm still gonna analyze on that 4 hour time frame. So what did I do on 15 minutes time frame? Next thing I do on 15 minutes time frame is see what I analysis, and what entry time frame. Yeah. That's basically what time frame analysis is. So in some cases, if you are back testing, like let's say for example, you're back testing your own the strategy that you are trading. And before I forget, this two time frame analysis is actually like you can apply it in any strategy you are trading, any strategy you are trading in the world. You just know your two time frame analysis. If it is SMC strategy, if it is price action strategy, if it is MSNR, if it is Alchemist, any strategy you are trading, name it. I don't want to mention it, but for me, I trade SMC and price action. You get so that SMC fusion combined together. So, and another thing I want to call your attention to is probably when you are studying your own chart, and let's say you are back testing or even for testing, and with your analysis, you actually see that the most convenient time frame for you is not 4 hour time frame and 15 minutes time frame. Yeah, your own two time frame analysis might be 1 hour and 15 minutes. Yeah, and what 1 hour and 15 minutes, yeah. And it might be 1 hour and 5 minutes. Any time frame you pick, just make sure that okay, one has to be higher time frame and the other has to be what a lower time frame. You get one has to be higher time frame with market trend, like just for market trend, you get so higher time frame uh for market trends and analysis. I'm going to be showing you how I use it like the two time frame analysis, how I use it on the chart. I'm going to be using schematic diagram before we go to the chart. So just know that the lower time frame is going to be your normal analysis as well and also your entry. So now this is what I mean by two time frame analysis. So let's say for example, this is a 4 hour time frame. In the 4 hour time frame, I will do what? I'll check the trend. I've already checked the trend. Okay, I see that the trend is that market is going up. I've already see the direction where market is going, right? Direction actually means trend. You get direction also means what we call trend. So I've already see where the market is going. So I need to analyze on that 4 hour time frame as well, which is that higher time frame. Yours might be 1 hour time frame, yours might be daily time frame, might be 2 hour time frame, might be 30 minutes time frame. Just know that you have one higher time frame for market trend analysis, and you have lower time, you scale down to lower time frame for another analysis and entry. You get. So on the 4 hour time frame, I've identified my break or structure. What I have to like identify in the structure, break or structure. This is a BS. This is a BOS right here. BOS. And what you need to pay attention to on higher time frame that you are using is the most recent break or structure. The most recent what? Break or structure. The most recent break or structure. This is where price is currently, and this is the break. So that is what you need to pay attention to. So once you have marked your preview like the recent break or structure, let's say for example, price is actually moving here. We did not have break of structure yet, so we automatically say this is the recent break of structure. But anything that make price go past this and break the previous high. So we already know that this is the recent break of structure, and this particular move is what we are going to like take advantage of. So on the higher time frame, that 4 hour, we need to mark our demand zone. If market is in an uptrend, we need to mark this is a scenario for uptrend. I'm gonna do a scenario for downtrend as well beside here. So we need to mark our demand. So the next thing you need to pick is your Fibonacci tools. So if you don't know what is Fibonacci tools and how to get it, just come to the left hand side here. If you click on here on all these tools, you see Fibonacci retracement. Just go here and pick the what Fib retracement. So and this is how I set my own Fibonacci tools. If I want to take a screenshot, I use only this for 1, 2, 3, 4, 5. Yeah, the 0%, the 100%, 25%, 50%, and 75%. So basically, all this we are saying is zero. All this one you are saying is 100%. 0.25 you are saying is 25%. 0.5 is and 50%, and the 0.75 is what 75%. So that's how I actually like do this. So with the two time frame analysis, I will need for me to counter trend. Originally when we have a break of season, we have a demand zone. We wait for price to what to trade into that our demand zone before we can take a decision to like but buy to the upside, right? But the higher time frame, before price come to the higher time frame, demand zone, is gonna take long, right? It's gonna take long. It's only when if you are a swing trader, that is when you now wait. You wait for that 4 hour to what? To mitigate. You wait for that 4 hour to what? To mitigate. You wait for 4 hour to mitigate. That is probably going to tell you that okay, you might be taking one or two trades in a week, or even sometimes you might be taking one, two, or three trades in 1 month, right? But if that is not what you want to be trading, you want to be a day trader, you want to be at least seeing opportunities probably 4 times in a week, 3 times in a week, you get that's a day trader, that's day trading on one particular pair. You get that's when you will now make use of the two time frame analysis. This is just a single time frame analysis where you wait for price to come to your 4 hour time frame and what you see confirmation and you buy. That is for swing trader. But now what happened? You know that this particular retracement that price did is also tradable, right? It's tradable, and that is what we are going to look at in the lower time frame, right? So when you want to trade my two time frame analysis, if you have already marked your break of structure, your demand zone, the break of structure, your demand zone on your on higher time frame, what you need to pay attention to, right? All you need to pay attention to is that okay, for every expansion, there's gonna be a retracement. As for yet, after this expansion, there's a retracement. After this expansion, there's a retracement. So when is that retracement actually gonna come in? That is what this Fibonacci tool is gonna be telling you. The way I design my own and I've back tested this and has worked for me. What is gonna tell me that okay, price is ready to retrace back to this zone. Don't forget we said the retracement is really tradable, and that is what we are gonna be trading on the lower time frame for the two time frame analysis. Only when price comes here, we now continue the trend. So we want to counter trend now. If you want to counter trend with two time frame analysis, you need to know when price is actually when price is ready to retrace back after the expansion, when price is ready to retrace back. So how do you calculate that? You have marked your uh low, you have marked your high. You draw your Fibonacci from the low to the high. When price traded back into 25%, you are seeing right here automatically for me with this fib and the analysis that I trade with, it automatically tells me that price is ready to what to retrace back to the POI, which is the other block, the demands we are seeing here. So once price traded back into 5%, I will wait for price. I want price to retrace back up again to retest a supply there. I what price started selling until it reached the what? Until it reaches the demand zone before we move another buy. So what I want to be trading at that particular time is this retracement, right? So when I see that okay, it might be it should be on that 4 hour time frame. The moment you see that okay, on your 4 hour time frame that you have marked your high, you have marked your low, you have done a Fibonacci from the low to the high, and you see price traded into below this 25% and 50%, like it traded in between this zone. you should be ready for retracement. That is when you will not be, you should be ready for counter trend. So I did not say you should quickly jump on the sell. Automatically for this drop, you are going to wait for a pullback again before price now sell to the downside, right? So what will you now do when price has traded back? If price trade inside this 25%, it is not yet a retracement. If price traded to this 50%, let's say your first push, a single candle push is on this 25, is on this 50%. Yeah, it's still tradable. You can still counter trade. Price will might still likely trade into at least 25% here or inside this 25% before it drops to the main zone. So what happen if price now traded below this 50%? Let's say after this expansion on the 4 hour candle just drop aggressively. Just one candle drop aggressively downside to this 50% or 75% or even below. Let's just say this below 50%, right? So anything below that 50%, anything below that 50% to this to this 100% are liquidity. So I would advise you stay out of counter trend at this time around. So price might still do a push up anyhow you wanted to do, and what price will just come and traded into this and push to the upside. So if price traded into below this 50%, you should be patient for price to come to your 4 hour demand zone. So if price now like traded into this 25%, you saw your first probably two candles are the one that actually enter this 25%. So price are likely to what to trade back up and drop again. That is when you counter trade. So when you see price entering this 25%, what should be coming to your mind now is now scale down to your entry time frame. That is the second time frame that you're going to be analyzing on and you're going to be going to entry for. So you scale down to from 4 hours, you scale down to 15 minutes time frame. Now on the 15-minute time frame, this is gonna be what you're gonna be seeing. You see this drop here on the 15 minutes time frame is gonna be something like this. Gonna be something like this. That is 15-minute structure. That is what 15-minute structure, right? And that this is where price is currently. That's 15-minute structure. So don't forget, this is 4 hour structure and this is 15-minute structure now, right? The drop that we first saw here is a 4 hour. That is where price is. That's 4 hour. This red line is 4 hour, and this one you're seeing here is 15 minutes. So the drop that 4 hour did, this is how it look like on the 15-minute time frame. So now on the 15-minute time frame, what did I say you should do again? You need to analyze and look for your entry. Now on the 15 minutes time frame, we already knew at the back of our mind that okay, this one is ready to trend back to the downside, trade back to the downside. That is counter trade. The moment we saw it inside this 25%. So we now do analysis. We do analysis on 15 minutes time frame now, which is gonna be this is a break of structure on 15 minutes time frame, right? And this is also a what? A break of structure in 15 minutes time frame. So after a break of structure, you need a yeah, there's gonna be a supply zone, right? This is for a sell. There's gonna be a supply zone. So we might have a suspending supply zone here as well. If this particular supply zone has not been mitigated, what you should do I'm giving you it like this now. I'm giving you it and detail of this video. So if you are yet to subscribe, just subscribe. If you want to be getting values like this, just subscribe to this YouTube channel and don't forget to turn on post notification as well. And don't forget to like this video. When you like it and some other people will able to see it, that's when some other people will able to like see it. The algorithm is gonna push it to the upside. So if this supply so we have after this high, this is the last high that we have from this push. This is the last high. So this last high that we have if we have a suspended supply, yeah, they are gonna have like different supply zone. Let's say this is three supply zone now. When we know that this is price, this is what we saw in 15 minutes time frame. We have this market. This is gonna be like a market structure shift now, but inside like it's actually an internal lower time frame structure, market structure shift and break of structure, right? Uh, so which one are you gonna use? Are you gonna use this supply? Are you gonna use this supply? Are you gonna use this supply? So as for me, if I'm counter trending, right, I will want to use the extreme point. Yeah, I know the reason why I said I want to use the extreme point is because if I use the extreme point and price actually want to sell, that means it's gonna sell from here, from that extreme point. So anything that makes price not to sell from this extreme point, that means that sell is not yet valid. That cell is not yet valid. Like anything that make this particular place, let's say this is where I set my extreme now. So and I want to hold my trade at hold like probably like 10 hours or something, or I just want to like target 3 hour, or I just want to like target 3 hour or 4 hour. You get, to be on the safer side, me, I will always target 50%. Like price should drop to 50%, right? And that's about 5 hour. According to this, your own might be 3 hour, might be 4 hour. Yeah, you understand? So, but according to what I draw here, that's what I'm saying 5 hour. So, what I'm not trying to say in essence is that anything that makes price push above this particular extreme point, this high, that's the reason why I'm picking extreme. It simply means that price has violated this high. So that means the counter trend I want to take is not valid anymore. Yeah, that's it. So if we pick this, right? If you pick this supply zone, yeah, price might take you out, you take a loss. If you pick this again, it doesn't mean, yeah, if you pick this zone and price take you out and you hit loss, it doesn't mean that that counter trend is still not valid. So far, this previous high is not yet violated, it's not yet taken out. This hold high is not yet taken out. If you pick it from here and it failed, that means you already have one loss. If you pick from here again and it failed, that means you already have one loss, right? So, but if you now pick another, this one, it now cover for the remaining losses. But you want to be on the safer side, not to like take multiple losses before you can hit TP. So I always advise you pick the extreme. Yeah, price are likely to push. Use all this one as liquidity. Yeah, use all this one as liquidity. Price. I'm telling you for the fact now that this thing happened in real chart. It happened in real chart. So if most of the time, the extreme point is the one that played out first, that play out most, and followed by this what? This second one, this second zone, this middle zone, followed by the, if that is if you have like three supply zone. In some cases, you might have like two. In some cases, you might have one, right? You might have one, which is going to be the extreme. So you might have two. So I'm just giving you the scenario of if you have three, that is the highest that you can have before price actually drop below 50%. So if you have three, just know that the recent one is not the one that you should be taking. As a matter of fact, I will even erase this. Don't bother even thinking of using this one because it's going to serve as liquidity. Going to serve as liquidity for you, which is inducement. So preferably you pick the second supply zone, or if you want to be a patient trader, you pick the extreme point to be on the safer side. So if the extreme points fail, that simply means that the what the sell that we want to take is not valid anymore. That this I has been taken out, so we have new break of structure is actually going to be a buy again. You get. I hope you understand this particular section, this particular explanation. So basically, this all this thing happen on a 15 minutes time frame. All this thing I'm saying, it happens on a 15 minutes time frame. You get. So that's all about these two time frame analysis. And basically, these are just SMC strategy. You get all the strategy I apply are SMC strategy. So let's go to the chart and see some movement. Right, you can see some movements. So let's go. The one that we can have, let me see if we have a recent. It's not a recent chart. I want to look for a clean one. You get a clean one, a very, very clean chart. Now we're going to have a break of structure on the 4 hour. Don't forget, we are on the 4 hour time frame currently. We are on the 4 hour time frame currently. Let me use currency chart. Let me use currency chart. This is a good setup now. This is a good setup now. This one I just my back testing on good. Let me use this upon good setup. So I'll switch to 4 hour. Good is kind of a very, very strong bullish momentum. On good, you might only be seeing breakout block. But what I see here, whoosh, is not what I expected. For it, it's not what I expected. But let's see where it is. The reason breakout structure here from this one, you know, do value like that. What I'm trying to say in essence is I'm seeing it here, but I don't want to convince you guys. Let me just stick to one. I'm seeing it here. You see, like this one, like this now. You see, this is a 4 hour time frame. We have a very, very strong push. We do not have a retracement yet. Even here, we have a very, very strong push. We do not have a retracement yet. So the only one I see that I can use as an example is when you have a valid break or structure on a 4 hour time frame and a valid push, a valid pullback, which is this. This is it here. We have this high, low break or structure now, right? This is what I'm saying. Break or structure on a 4 hour time frame. Don't forget, this is a 4 hour time frame. We have a break or structure here. We have a what? A break or structure here is a BLS. And on the 4 hour time frame, we already have our demand zone here resting. This is our demand zone resting here. You should know that when we have a high, we have a low, right? This is a high. This is a low, this is a high. So within this low, we already have our demand zone resting here. Even if we pick this particular candle as our demand zone, which is our POI, which is wider, price is traded into it. So let's pick that one. What happened? I think network. It's gonna load again. Let it load. Analysis. So currently now I'm on 4 hour time frame. So 4 hour, we said we are going to look for the trend and we are going to check, we are going to analyze on 4 hour as well. So let me quickly delete this. So I'll start again. So we have already identified this trend. Let's say, for example, this is where price is. We did not know what happened after this particular move. Well, this is where the price is currently, right? This is where the price is currently. So what we need to just do is just like look for market trend. What is market saying? We look from the left to the right. We see that market is going up. So that means market is an uptrend. We have identified that. So the next thing we need to look for is the recent break or structure. This is the recent break or structure, which is very, very obvious. Recent break or structure. Where is the where is the demand zone? This is the last order block, last candle. That's our order block, which if I've talked about some mitigation and unmitigation order block. Yeah, it's like that's for the advanced class, I think. Yeah. When we're talking about mitigation and non-mitigation order block, this other block that is the lowest demand has been mitigated. You see, price traded into it. This one, as it pushes up, price traded into it and push up. So the recent OB is gonna be here. The recent order block, which is gonna be our demand zone. So that's where we are expecting price to come to. So we have identified break or we have identified the demand zone. So what's the next thing that we go pick? We pick our Fibonacci tools. I said we are going to draw from the low to the high. And once we see that price has traded into 25%, and look at it here, price has traded into 25%. Like I said, price has traded into 25%, which is this thing you are seeing here, price drop. So it's already telling us that, okay, price is ready to what? To reverse to this OB. So we want to take advantage of price coming down to that other block, right? We want to take advantage of price coming to that other block. So that's when we now switch to, I would like to switch to 5 minutes because I use 5 minutes a lot on good. So I'd like to look for 5 minutes. And 5 minutes is what we are going to work with, right? 5 minutes is what we're going to work with. Let's see, where are you? Where are you? Where are you? So we are going to look at structure on 5 minutes. Yeah. We're going to analyze and we're going to enter. So look at it here. This is where the price is when we actually like check where we check like this is where the price is. And according to what I always said, I said, okay, when you mark the structure, this is the high, price drop, create this, now drop here. So the structure we had on the lower time frame for our entry is here. This particular break to the downside. So let me delete this fib. So we have this break now to the downside. So if you remember what I said, that is it that price use the extreme? I always want to use the extreme. And where is the extreme, which is the highest point here to pick my entry? This is the extreme that the highest place price reached before started dropping. And where are we expecting price to drop to? This particular box. That's where we are expecting price to drop to. And this is where price is currently. So basically, we're gonna set our limit here, which I said this particular one that a lot of people will want to buy from is gonna serve as inducement, right? If you are following, this is a very, very valuable information. So we are expecting price to drop to this zone. We're expecting price to drop to this zone, right? So we want to counter trend. So we want price to come to this particular high again. So look at what price did. Price literally comes there and sell to the downside. You see, price literally come there and what? Sell to the downside. If you are satisfied with your 3 RR, you are good to go. Or if you want to hold to the particular zone, you see, you want to hold to the zone we are expecting price to come to is about 5 RR. But yeah, if you are cool with 4 RR of 3 RR, you are good to go. This is 4 RR. That's sharp one. Sharp one. Yeah. It is not as easy as you think that I spotted it here. It's because I've studied. So you should go on your chart as well. Study, backtest it, check your previous chart, how it works out, how it played out, and the result you actually had during the time. So you should like check it as well. You get so that's first example that we had on the counter trend, which is two time frame analysis, right? So if you want to continue the trend, like this is for counter trend, if you want to continue the trend, it's actually going to be something like this: higher time frame charts, higher time frame trend, right? Higher time frame trend, which is the recent break of structure, right? And we have the what? The demand zone resting here. So once we use the lower time frame to counter trend, once we use the lower time frame to counter trend, and price enter our POI, right? Price enter our 4 hour POI. Once we know that, okay, price has fully entered our 4 hour POI, we wait for confirmations. And we are still going to be using the lower time frame as well. So it's basically two time frame analysis. You counter trend and you want to continue the trend. So when you now see when you now see confirmation on the lower time frame as well. Probably this is market structure shift, price traded into it, and that boom, that is when you now continue the trend. It's still two time frame analysis. This one is trend continuation, and this one is counter trend. So I most of what I use is counter trend a lot. So when price now reach my 4 hour uh demand zone, I will still use a continuation trend. I will not continue the trend. Basically two time frame, 4 hour trend, and 15 minutes entry you get. So that's that on two time frame analysis. I want to just go on into your own chart, practice it a lot. It works like magic. Practice it a lot. It work like magic. So if you are able to practice it, you're gonna see results. You are going to see a result. This is what happened here as well. This is a recent breakout structure, and there is a demand zone resting here that price later comes to. So when we pick our fib, we see that this is a Fibonacci. Price already into below 25% and price go back and drop. If you check the 15 minutes, if you check the 15 minutes time frame, that's how it looks. You see, this is the one that I just show you. Yeah, this is the one that I just show you. Look at it clearly. Look at it clearly. Or this one are just my what I was checking, the error I was checking on the chart before. So this is two time frame analysis now. Price traded into below 25%, right? And we have the structure. Okay, price has been breaking to the downside. Look at it. When price reach here, comes here, break to the downside, and give us something like this. So I told you that extreme works 100%. Like most every time. Look at it, extreme supply. Price uses this one as liquidity, and it drop aggressively. It works a lot. Once you can identify this on your 4 hour time frame, so I don't on good because 4 hour on good is some kind of heavy trend. 4 hour on good, you likely see a full retracement as we actually see it here, and the old one that I just explained to you. What you normally see on 4 hour is an LD trend, LD push. Look at it, push. Before we can have a pullback here now, right? Before we can have a pullback now, it might take some times. So we have already identified a break of structure like this. We've identified a break of structure. We've identified this is 4 hour time frame. We have identified this demand zone, this week as a demand zone. So for us to know if price is ready to come back, we have to see. This is the high. We have to see price. You have to see price traded into this zone, and that is when I'll be like, okay, price want to sell to this downside, so I will now wait for price to sell. But for now, the trend is still going up. We are still looking to buy. There's no sell opportunity yet on gold. No matter what, there's no sell opportunity yet on what? on gold. So you should keep buying on gold, keep buying on gold. So if you go and study your chart, it doesn't work only on gold, it works on every pair. It works on synthetic as well. I've used them multiple times on synthetic. Yeah, I use them a lot on in the synthetic market. I use them a lot in the synthetic market, you get. So I just use gold as an example because that's currency. I use them a lot in the synthetic market. So go and check every other currency, back test it. If it work for you, let me know. And if you're here to subscribe, click the subscribe button and yeah, see you some other time. You get.